Hi, my name is Nicholas Link, the CEO of ILUS International. I just wanted to come to you today to give a little bit more information about the shareholder letter that we sent out on Friday after market hours. Not ready to go into too much more detail as things will sort of unfold over the coming weeks, but just to explain a little bit clearer than is easy to put into words on a letter. So first of all, I'll just talk about the timing in general and the market in general. Conditions are pretty opaque out there, as I'm sure every one of you guys will know, as shareholders, investors, future shareholders, general traders, whatever your particular interest might be. No one really knows where the bottom is of the market at the moment. I'm not talking about our stock, I'm talking about in general. And this is also not trading advice. This is purely opinion based. I think there's a massive shift between West and East happening, which is sort of an underlying current around the current conditions. The Iran and Saudi making friends over the weekend also doesn't necessarily help that bid for power, where a lot of that power struggle or power shift and capital shift is really pushing towards the East, really as a combination out of the Russia-Ukraine war and who's supporting who and who's getting involved with what. Now, that said, as a business, we're pretty well positioned for all of it because obviously we're growing our business in the West quite considerably. We're also well positioned in the East. So we feel we are, let's say, the best of both worlds for making the most of whatever opportunities are going to come out of this. However, obviously in the short term, market conditions with increasing interest rates, bank runs, bank collapses, whatever we want to define it as. But I think and increasing interest rates likely in the future, I think the biggest concern for everyone, including us running the company and including us as a board, is uncertainty. When there's a particular thing and how long it's going to take, you can deal with it. You can plan around it. You can make a plan A, B, C, D. However, when things are a little bit opaque and nobody's really sure what the next day is going to bring or the next 4 hours is going to bring, it makes it a little bit more complicated to make, let's say, in a way, life-changing decisions, which is obviously what some of our decisions are. For many of you shareholders, or for all of the shareholders, and for us as a board, for everybody's, let's say, market value, wealth, whatever you want to call it, getting the uplistings done, getting share lockups done, making decisions, making investments, making capital investments, they all need to be done at the opportune moment. And making those decisions on, let's say, an opaque, gray, unknown bunch of factors is not really something that we're particularly comfortable with. We are certainly not going to gamble people's savings, investments, shares, our own futures, our staff, our business. We've worked damn hard at building this business up, and we'll continue to do that. We know exactly where we're trying to go, and we know exactly how we're going to get there. It's really only the time period and how long that journey is, which is often impaired by external market conditions. Now, I know that may not be what everybody wants to hear, but I think the one thing that's really, really important, and I guess just saying this out loud was on my mind, you guys almost need to trust us with that because there's almost no other way. We have to make the right decisions for the business. And those right decisions are for the business, for you as shareholders. They're not necessarily going to benefit this afternoon or tomorrow morning, but they will benefit the shareholders or are intended to benefit the shareholders. So making rush decisions and making, let's say, a hash of things will cost people money, and we're just not interested in doing that. It'll unwind all our good work. We've spent 2 years working damn hard at this business, and we're not about to put that in any form of risk. Now, that said, let me explain what I mean, because we're basically not prepared to let the tail wag the dog. And I know everybody wants, I say everybody in particular, the short-term traders, wants an immediate uplisting. Yes, you are absolutely right. I agree with you. We did say that we would be uplisting before the summer. We did say that we'd be uplisting towards the end of last year and into the summer of this, early part of the summer of this year. You're absolutely right. And yes, we did say that. And at the time, we were right in saying that because that was the intention. And certainly that was the board's intention, for which we have to think very, very carefully about the timing again. Now, what I mean by that is you might say, cool, next Saturday, we are going to a barbecue at a friend's house. And that is your intention, and you will do that. However, when you head out from your house and there's a massive traffic accident on the way, and the speedway or causeway, whatever you call it, is completely blocked up, what do? You don't not go to the barbecue. You find another way. The other way might be a bit longer. You might have to go arse about fast, roundy corners to get there, and it might take you a little bit longer. But you're not going to not go to the barbecue because there was an accident. But you're also not going directly on the same course. So where you've said you would be there at 5, you might arrive at 5:30 or 6, but you're still going to get there because that's your intention. And that is no different in what we are trying to do. What I'm trying to just give you a simple explanation for people to say. We are not uplisting. We are 100% uplisting. ILUS will uplist. But it's all about the timing. So right now we are literally coming out with intention, everything packed. We've got in the car and we've seen a massive accident ahead of us. We saw the accident coming from the last quarter of last year, and responsibly, absolutely responsibly, was the right thing to do, was take a watch and see approach. Despite what the market were expecting of us, the watch and see approach was the correct thing to do. If we hadn't, we would have been uplisted now as the market's crashing, which would have been devastating for everybody. So what we've done is taken a watch and see approach, build our strategy. We have not stopped one single day on the plan and the roadmap for uplisting. And now we've got to the point where we can actually almost see the car crash in front of us, and now are planning to go around the car crash. Now we actually have our plan, we have our roadmap exactly clear of exactly how we're going to get there. So for us, in one way, the market position now of where we're looking right now with SVB banks and Signature Bank and etc., and who knows how many others are going to be this week and next week, of the next 3-4 weeks. I think that's almost sort of brought everything to a head, where we actually have clarity on, that things may be pretty bad, may be way worse than we thought, and potentially may take longer than we thought in terms of the market conditions, which is why we've decided to hold off a little bit on ILUS's uplisting in terms of timing. Now, I'll just repeat, we will uplist ILUS. 100% we will uplist ILUS. It is only about the timing. And I don't think you want us to uplist at a time when the market is, excuse my language, shitting itself. It's literally the only way to put it. Now, that's obviously all stocks. Now, one thing that's, if you look at the uplistings from last year, first is that the uplisting model has more or less blocked up completely. There's very few uplists going on, very, very, very few. Towards the end of last year, there was almost a complete moratorium of uplistings from NASDAQ. And if you look at the uplistings that did happen last year, the majority of them were unsuccessful. Not unsuccessful in uplisting, but unsuccessful in the outcoming result from the uplist. And on that basis, what are we uplisting for? We're not necessarily running away from anything. What we're trying to do is enhance the business and take it up to the next level. We're not trying to take the business up a level and get beaten over the head every day and end up back where we started and cost everyone money and cost us a lot of time and effort and heartache. Those uplists were unsuccessful for a number of reasons. And, we've learned by watching and very carefully observing what those companies did. A lot of those companies uplisted purely because of shareholder pressure, number one. Shareholders were just like us, where we said we would do it. They said they would do it, and they drove and they drove and they did it. And now the shareholders hate them. I'm not going to be that person. JP's not going to be that person. The rest of our board is not going to be that person. When we do an uplist, we are your heroes. We're not your enemy. And that does mean making tough decisions in the short term. That may mean that we get hated for a little while. However, you've got to understand we have your best intentions at heart. Operating on the OTC is 10 times harder for us. However, it's 10 times safer. Therefore, it's the right option right now. Right now, it's all about safety. It's about consolidation, continuity, sustainability, which we don't believe right now, while the market is turbulent, that ILUS could bring in the big boards. Second reason a lot of those companies failed is they believe they could operate on an OTC mindset on a big board. It doesn't work like that. And the big boards don't necessarily work as much on hype as they do in the OTC. Word spreads around the OTC that something might be happening. Everybody goes nuts. The share price goes up 10%, 20%, whatever. NASDAQ doesn't necessarily work like that, because a lot of the buyers, the volume buyers, are institutions. They work on a whole different set of parameters. They do much more financial modeling, much more analysis. They have research analysis. They're looking at buy and sell reports. They're doing things in a whole different way. So relying on, general hype, let's say in the OTC market, is not going to work on NASDAQ. And unfortunately, a lot of those companies went up and found out the hard way that actually they just weren't appealing businesses to the institutions who weren't going to buy their stock because just not interested. It's just they're just not fundamentally strong enough businesses to really generate cash flow. So, that being said, that's also important for us and we said this going back maybe a year or longer ago, when we uplist, we need to be, a strong business with decent revenue, strong profitability, strong management team. It needs to be, we need to be in good enough condition, because if we go up to a big pond and we're a small fish, we're going to get eaten alive, which is what happens to the majority of those companies. And there's also a bunch of other reasons. A lot of them on the way that they uplisted also potentially had tons of warrants, had tons of, toxic stuff in there, which obviously, as we found out from our experience on ILUS when we acquired that entity, it hurts a lot and it's very hard to get back from that. Once we had, the flush out of old toxic guys after we took over. Now, if you do that on a NASDAQ level, it's a whole different story. It's really hard to recover. So on that basis, I'm pretty comfortable where we are. I know you're disappointed that we're not uplisting right this very minute. I'm disappointed. I know JP in particular is even more disappointed. We've worked very hard for this right now. However, we haven't worked right now really hard to fail. We've worked hard to succeed, and that we will do. And we will bring this uplist at the right opportune moment. Now, following on to that, as per the letter, it is absolutely the right time to uplist QIND. Now, we know, it's still going to be tough. It's still going to be a very heavy lift. However, as I think I said in the letter, we've been working for this basically non-stop since the deal started a year ago, the QIND deal. So, we were very well geared to it. It's got strong revenues. And why is it the right strategy? So let me try and explain that in a bit more detail. So the first thing is, we believe having delivered one successful ILUS with QIND will add a lot of credibility to the ILUS uplist. In terms of the board, the management, the shareholders, everybody will go, okay, these guys have done it once, they know what they're doing. As opposed to lifting up our core mother house without any credibility. So that's important. The second thing is the QIND valuation is obviously quite substantially large, and that's not feeding through on the ILUS balance sheet right now. However, we believe after an uplist, that will filter through to the ILUS balance sheet. It almost has to, because it's now got a NASDAQ valuation. The stock is now trading on not necessarily a NASDAQ, but let's say a major board. When it's trading on a major board, it's got a real valuation. The stock is trading. There's institutions behind it. It has a much more appeal. Therefore, the ILUS, the effect on the ILUS valuation and ILUS market cap should theoretically be there. And then with the credibility of the shareholders knowing that an uplist, we know how an uplist goes, and then obviously we've got other assets which will be spun out and uplisted too. So we believe that that's a real strong influencing factor for the ILUS uplist later. And when we say later, we're not saying never, never. We're still very much ambitiously hoping that it's this year. But we are monitoring the situation on a day-by-day basis. This week is obviously going to be a telltale. What happens in the next 24, 48, 72 hours? I think maybe decide what the outlook of the summer may look like, but let's see. And then one of the other reasons is the actual business. The QIND business is phenomenally strong. It has a very, very heavy order book. It's very busy. It's got a lot of stuff coming in. It's bidding on hundreds of millions of dollars of quotations and tenders, which a lot of them look very, very hopeful. It's one of the few companies in that particular market segment that can deliver, has delivered, and it's got the proven track record. So we're confident that the revenues will, increase. I want to use the same word again, astronomically, which obviously at a NASDAQ level really gets appreciated. When your revenues and business get stronger at NASDAQ, the nature of the investors is different, and you therefore get a slightly better upturn, should we say, or uptake in the share price. However, at an OTC, it appears that it just goes completely on deaf ears if there's no hype. It's not really, OTC doesn't typically run too much on fundamentals, as we know. However, NASDAQ and New York and whatever do. Therefore, we believe growing that business on a big board will have a dramatic effect too. And off the back of the current order book, we would anticipate that would happen. But also, if you refer back to the beginning of this podcast, we're talking about the shift between West and East. So although we're going inevitably into a recession, typically what happens in a recession is oil price drops because demand drops, because industrial and manufacturing and cars and everything sort of just reduces. However, in this particular instance, we've almost got a double-edged sword, because although we're facing a recession, we've also got these macroeconomics, geopolitical challenges going on with an oil war between the West and the East again. So basically the control of the oil, whether we like it or not, due to current government's policies, the power of the oil is now it's firmly in the east, between Saudi, Iran, Abu Dhabi, Russia. So whether we like it or not, that is the matter of fact. And unfortunately, they have the ability to starve the West of supply, or control the supply, as we found out from OPEC's last meetings and Russia's last announcements on oil. So whether we like it or not, whether America is weaponizing the US dollar, by sanctioning people, inevitably it's not making a difference. Although propaganda tells you it's making a difference, we can see it because we're in the Middle East where this is all going on in front of our nose. It's not particularly making a difference. So all it's really doing is making Europe and the West suffer considerably. And that suffering is likely to get considerably worse, because that pressure is going to starve oil supply, which inevitably is going to push the oil price up. So although demand might be reducing, so is the supply, which doesn't normally necessarily work like that. So, and the East is obviously using that power, or I'm anticipating the East is going to use that power to try and basically return the favor of the weaponizing the dollar. And on that basis, we would expect when oil price goes up and production is strong in the East, that the demand on equipment will grow and continue to grow. And again, we have an order book, and our particular production orders take anything from a year to 3 years to produce these products. So basically, our current order book is not, without it slowing down. Even if we didn't get another order in the next year, we're still strong for the next 2 to 3 years. Therefore, the timing of the uplist is almost outside of the scale of the recession. But what we are very appreciative is that we're going to have to work phenomenally hard on roadshows and with the institutional investors, with the big funds, to get that adoption and buy-in. Now, again, because of where we're located, we think that would be quite attractive and quite well received by the funds who want to sort of maximize on being between West and East, where we were very well positioned. So to maximize on the East power and the East money, but still take it into the West in terms of returns and profits, which is exactly where we lie. So, we're confident and comfortable that our strategy on a QIND uplist timing is pretty good. And we know that will benefit, or we hope that will benefit ILUS and sort of the rest of the group. And also, I think JP may touch on in his presentation, is that QIND is a whole lot more than just an oil company. It manufactures some hydrogen plants. It's actually manufactured the biggest hydrogen plant ever produced, as far as we know, and it's got inquiries for more. So on that basis, we're still ticking the environmental box, where the world is still going to probably start to go that way. It also produces some wind turbine product, which again have been, let's say, relatively underdeveloped in terms of the QIND business, but we would anticipate that growing as well. So just to recap on those topics, ILUS is definitely an uplist. It's just about the timing, and it's about a watch and see. And there probably isn't many shareholders in this, watching this podcast, who say that they don't care, they just want it done now. I think almost every shareholder would say we want the best value from it. We want the best value, the best uptake, and the biggest success that we can possibly get. So, and that is what we intend to deliver. And QIND, the timing is now. We believe now is the timing to get the best uptake of an uplist. And while I'm finishing off this topic on this particular thing, because I know it's not an easy topic. Everybody wants the uplist right now. We know that, so do we. But being successful. Now, I'll leave you with one saying. It says that tough times create strong men. Strong men create good times. Good times create weak men. And weak men create tough times. And this is repeated throughout history. And I don't mean men individually. I mean men and women as a whole. And that cycle basically is the cycle that we've been through for the last, however long it's been since the last recession. And we're fortunate enough, and we touched on in the letter, that our board is pretty competent in having been through this times before. A lot of the management of many companies, when the last recession hit, was still in school, university, or living with their parents. And their exposure on tough times might have been dad's friend lost his job. We didn't go on 2 holidays this year. We weren't eating out as much, but, life was still fine because it was your parents that were navigating through it for a lot of you. Sorry, I don't mean that disrespectfully. However, when the last recession, 2007 to 11, 13 recession hit, I was running 2 businesses. I went through 2 businesses through that recession. Actually, ironically, with a bank physically going bankrupt on me as well at that point. So it doesn't mean I know it, and doesn't mean I know it all, and doesn't mean I'm going to get it all right and have got it right, but it does mean I've got a much better, and JP's got a much better idea of what's coming at us and how to navigate through that safely. And it does require doing things differently, even including of your own guys trading portfolios and your own strategies. If you do the same thing tomorrow as you were doing a year or 2 years ago, I promise you by Christmas, you're going to have no money left. We have to adjust with the times. We have to make strategies and decisions based on what's currently happening. Although you might have a bigger, broader roadmap and a bigger plan, we have to really focus on the minute detail, which is really where we are. So leaving you with that comment. By the way, I didn't mean that sexually, as in strong men create, tough times create strong men. That's men and women. But what I meant by that is, we kind of went through a period of, the last people that went through the recession became pretty tough, pretty exposed, pretty experienced. Then it went into the good times where a lot of other people came into the market and there was just a surplus of money and there was boom times, and there's been a bull run ever since. And it was so easy to make money. Whatever you touch turned to gold. Times were never tough, and that just made seriously good times. A lot of fun. Everybody had a ball. Everybody was going on 2 holidays, buying Ferraris, bigger cars, whatever. Made money today, lost money tomorrow, made it again the next day. But that typically brings tough times, which is now where we're back to. So now it requires that steady hand again. And what I meant by the tough men/women coming out of those times is, it means we have to make tough decisions. It means I've got to, and JP has got to not be scared to stand up here in front of you today and say, guys, I know you want to uplist right now. It's not the right time. You've got to trust us. And we've got to be brave enough to take those arrows and those bullets, because we know we're doing the right thing. We have to be tough. And we all have to be tough. Every single one of you need to be tough over the next month, 3 months, 6 months. Let's hope it's not more than a year. But we have to, because if we're not, a lot of people, companies, and everybody will be out of business and lose a lot of money. So we have to be strategic in our thinking, and that we will do. That I promise you. So I will end on that note, guys, and I will follow on with a little bit of an update on the share lockup. Right, so just to talk a little bit about the share lockup, I'm really not going into much detail about this because there isn't a lot to report back on it right now, other than what we said from the very beginning was, we will do a share lockup, and we intend to do a share lockup when we believe we will get the most enhanced value for the lockup. And we believed, as we said in a couple of meetings and podcasts and whatever last year, shareholder meetings, whatever, that we didn't believe that would be achieved when the share price was moving, up and down, swinging around the show. People may not want to lock up when the price is going up. They may want to be able to sell. They were maybe scared that it was going to go down because they didn't know the plan. They knew there was an uplist, but they didn't know if it was now or Christmas or in 2039. And we felt that people wouldn't necessarily lock up at that point. At that point, we also hadn't become fully reporting. We hadn't done all the stuff we had said we were. There's still a name change pending, but I believe it's imminent. Another word I know you guys love, but it really is. I'm sure you're probably following the filings. It's just a matter of FINRA going through whatever they've got to do through the final bits and pieces. But the point is, we've delivered on everything we said we would, and we will continue to do that. So on that basis, we now believe there's a bit more credibility for people being prepared to lock up. The share price in general, it's not just ours, but across the market, is typically doesn't have a massive, pretty much no share price have a massive upside ahead of them in the next, certainly 1 to 3 months. We would expect us to get, substantially stronger than where we are now. We feel we're very undervalued. Again, this is not investing advice, my personal opinion, and based off our balance sheets and our own businesses, but whatever, we would expect that, we will see some upside. However, the days of something running to 30, 40, 50 cents in a month or two or a day is highly unlikely pretty much on most stocks, or most proper credible stocks that are running a business, not hype. So therefore, I think the shareholders are probably, and probably the long-term shareholders are the most likely ones who would lock up. Probably will see that and already have that in their mind, that there's now a much more, let's say, I don't want to say stable, because it's not stable, because obviously the market is very much not stable. However, it's a little bit more predictable that there's not suddenly going to be a 40% increase tomorrow. And hopefully, I'd like to say, touch wood, that there's not going to be a 40% decrease either. So kind of the tram lines are getting a little bit tighter, perhaps in the wrong trajectory, because of more macroeconomics. However, we're hoping with our business in the uplist of QIND, that's going to turn around, with a nice upward trajectory, but manageable, sustainable, controllable. So that said, we believe a lockup may work out quite well now, because there's the QIND uplist, and we always said we would do an uplist. We would do a share lockup at the roundabout the time of an uplist, because that would create maximum value. So that time is now coming at us rapidly. extremely rapidly. And we believe shareholders may want to protect their bottom line by locking up. If the incentive on the lockup is done correctly, that we protect bottom line and provide upside. Now, that said, the attorneys are working through it. Now they've been given the very definitive mandate of to do the QI and uplist and how to physically do it. Between the investment bank, our attorneys, and our board, we're now working on a strategy on how to actually deliver not only the uplist, but an ILUS share lockup in conjunction with that to maximize the returns for those investors. So I know that's not a lot of information. That's not explaining exactly how it's going to be done. I know it's probably not a lot more information than we've already said. However, what it does point out is that the clarity of the timing is now there. So now the timing is on us. As I said earlier in the earlier presentation, that we were on a watch and look approach going into quarter 3, 4 last year, because the market macros weren't looking great. They haven't been looking great this quarter, but we now know our clear strategy because of the timing for QIND. Therefore, it allows us to now actually put in a firm, proper plan for it and exactly how that might work. So watch this space. I can't give you an exact definitive timeline. However, I can tell you we're intending QIND certainly in the summer and in the first half of the summer is the intention. And therefore, you could expect the lockup to run more or less parallelly with that. So I'm sorry I haven't got better news, but as I think we said in the letter, we don't necessarily have bad news, which in its own is good news at the current market conditions. And, you know, we thank you for being with us. We thank you for being a shareholder, being a loyal shareholder, and for putting your trust in us. And I can assure you we work day and night, you know, for your best interest and to grow this business. And we will continue to do that. And we very much hope for, you know, a happy future together. And the next shareholder meeting us saying, you know, we executed on that absolutely perfectly. So anyway, thank you very much, and we'll talk soon.